Hello, this is Brian Shannon from AlphaTrend's Blogspot. It's Friday, November 30th, 2007. The market has closed, and the S&P 500 closed right on that 200-day moving average. If you look at it here, the value of the 200-day moving average is 148.4624, and we closed at 148.45 or 47, depending on where it ticks right now. But basically, we closed right on the 200-day moving average, and although you can't really see it very clearly right here, there is a slight sloping downslope to that moving average. Actually, it's just turning flat again. So basically, a lot of indecision from the very long-term standpoint. Again, looking at the weekly time frame, just a lot of indecision represented by those moving averages crossing back and forth. And typically, though, when the market breaks down so hard through the 200-day moving average, rallies back up to it, and is flattened out or declining, it does a lot of times represent a bigger problem for the market. Be sure to view that video I put on the longer-term trend of the S&P 500. I think it was Tuesday of this week. There's still a lot of valid points in there. But yesterday I had mentioned that you want to wait for evidence of the sellers taking control before you actually initiated a short sale. And today we had a gap higher based on some outside catalyst, that being the Fed. And the market gapped up. The sellers were in control pretty much all day, though. You can see that here on the 1-minute time frame that the sellers were in control. It was below the daily VWAP, and the better opportunity really from a day trading standpoint was from the short side. And I'd shown a trade I had done on my blog on the short side today in one of the shipping companies. But basically, on the 10-minute time frame, when you look at this, I'm going to tell you that you want to give the benefit of the doubt to the buyers in the intermediate term. It doesn't mean there can't be a nice short-term downtrend within that intermediate-term uptrend. We've got a real mixed picture. Short-term, trend is down. Intermediate-term, trend is up. Longer-term, trend is down. Super long trend, kind of neutral really in here as it crosses back and forth. So it's just, again, a time to be more of a trader and to be very disciplined. And if you can't do that, then you probably shouldn't be trading. We did see the market pull back, though, to this yesterday's highs, found a little bit of support in there. And something else that I wanted to share with you was this, is the VWAP from basically, we can take it actually from when the buying began last Thursday and see that the average price that the S&P 500, the spiders, have traded at since the holiday shortened half day last Friday was right here at about 145.80. If you take it just from Monday, or from the 28th, this is looking screwed up to me for some reason. Actually, since those 4 days. The last 3 days, though, still solidly above the average price. So the buyers are still in control based on the average price paid here over the last 3 and 4 sessions. And again, the rising 5-day moving average says basically give the benefit of the doubt to the buyers. But there should be pullbacks within this intermediate term uptrend. But again, we find that at this larger period of indecision, basically. So I'm going to just continue to day trade it. That's where it seems like the best opportunities are. I've been pointing at the well, yesterday I started to say, here's the possibility of something that might be setting up as well. If we were to get a pullback down towards that rising 5-day moving average, maybe it comes in here. We throw some Fibonacci on there and say from this low to the high today, a 50% retracement would take it down to that 145 level. We know that 145 has been important for this market as well. So a pullback to 145, 145 and a half would be bullish for this market from looking on this time frame. And if it was to rally from that level, it could be setting up a bigger reversal of this inverted head and shoulders pattern in here. So I've said it a couple times this week that you've got to really just keep your mind open to really anything in here, because this long-term picture is just so indecisive right now. But it's a day trading environment, basically, is the way I feel is the best way to approach this market. I've been comparing the S&P 500 action to the action in Google. And Google, like I said, exhibited some of the same things. And these are the lines I drew on there yesterday. And looks like it's not even updated from yesterday, which is odd. So let's just go ahead and change that. So now we've got the market did rally up past that 2/3 retracement level, but it failed on the gap today, and now it's right back along that 5-day moving average. You might also notice here that we do have a divergence, a negative divergence from the MACD. That is, the stock made higher highs, but the MACD made lower highs, indicating that the momentum wasn't as strong on this leg up, and sometimes that does create a situation where you see a reversal. I don't think it's well, I haven't found it to be as valid though as the positive divergences when we have a positive MACD divergence from lower prices. So it's just something to keep in mind. I think that realistically, if Google's going to fail, it's got to break below this low right here. Breaking below 660 is where Google, I think, would have troubles from a bigger standpoint. So a lot of indecision in this market still. The semiconductors, I said yesterday that this is the weakest group. I don't know where my moving averages went there, but this is the weakest group, and that I thought that 415 was an important level. 415 failed today, and it closed below this 5-day moving average, which is flattening out. So this raises kind of a cautionary flag here, just the fact that it did break down below the 5-day moving average and below this little level of resistance, and it's the weakest group. It's been leading the market lower. It still could recover in here. This might just be a trap. If it gets back above, I'd say this level here, if it gets back above 419, let's say, then I think we can breathe a little bit easier as far as the semiconductors not being able to drag the entire market down. The IWM did finish with a gain today of 43 cents, or just about 0.5%. But obviously in here, opening way up near 77.5 and closing down at 76.41 or 76. Why does my chart do that? You know what I think I've got to do is change the time to like 16:02 or something. Yes, that's what it'll do. So here can we see this is where the market actually closed. But negative day, obviously, pretty much below that daily VWAP all day, except for maybe the first half hour or so. And this was the reason I was kind of a little bit more confident on the short side today. It was basically the Russell 2000. When you look at the daily time frame, it did rally up above that declining 20-day moving average. We closed right on it. We still got the 50 below the 200 in here. We've had a low volume rally. That rally, if you look at Fibonacci, you can say that the retracement here was a little more than 2/3, and then it failed, so it came back in there. And just this, this continues to be the weakest market. The level I pointed out as far as important support is right here at about 75.80, and we can probably stay 75.50. But that level is going to be important next week. If the IWM breaks below that level, I think that it puts the 73.5 level. It sets it up for another test of the 73.5, 73 level. And if that were to happen, again, the more times that support is tested, the more likely it is that that level will fail to hold up, and we could experience a breakdown below that 73 level, which could just open the floodgates to a bigger sell-off down near 68. Don't be too concerned about that yet until it happens, but keep it in the back of your mind that that's the possibility of what could happen. Right now, we do still have a rising 5-day moving average, so again, it's just more mixed signals and an environment that's really best off traded very aggressively. The Qs, the NASDAQ 100, opened up just above that 50-day moving average and sold off. And this market actually closed with a loss of 0.75%. And you got to look at this market. I pointed out earlier, or yesterday, I think, on my blog, I showed some of those big rallies that occurred in 2000, 2001. And these rallies get people excited. I mean, when the market rallies 6% over the course of just a couple of days, you know, it destroys the soul of the short seller, and really gets people excited that, hey, missed the bottom. They start chasing prices, and then you get a fundamental catalyst of some so-called good news. A lot of institutions are going to take that opportunity to sell sell short, or to lighten their long positions into that. So you have to be aware of where has the market come from. And here we've just seen the market rally from basically 49 up to over 52, so 3 points in 4 days. And where does it have the potential to go to before it's likely to meet a source of supply that will slow this uptrend and possibly cause the market to reverse? Well, you know, this resistance right here became support. 1, 2, it broke right here. And support broken often acts as resistance. We've got the 50-day moving average. It just makes sense to sell a little bit in there if you're long, and then look to the shorter term time frames and say, is the evidence there yet that the market is breaking down? If the market is, you know, is showing us that it's breaking down, then this 5-day moving average will flatten out and it'll begin to turn lower. This is probably the weakest market, though. If you take a look at, from this gap here, at the average price the Qs have traded at, it's about 51.44, so just below where we close. Meaning that since this market gapped open on Wednesday, since it gapped higher on Wednesday, that the average price the stock has traded was about 51.45, meaning that most participants are losing money if they purchased over the last few days. It means that the short sellers are back in control of the shorter term trend. Now, a lot of people look at this this VWAP and ask me where they can get that information. One place you can look is on bigcharts.com. So, for instance, if we just take a look at the SPY and we go into an advanced chart right here, on the left-hand side, we'll change it to 5 days worth of data with 15-minute bars, and then what we'll do is on an upper indicator, we'll click this volume by price. And this shows it a little bit differently, but it's a pretty neat little perspective. If you look at, you know, the largest volume of the last 5 days is right here at about 147. If we take a look at the Qs, you know, and this is just for whatever time frame you choose, but if we look at the Qs, you can see that there's been a tremendous amount of volume. Most of the volume has been traded at about 51.5 or so, and the market closing below that means that's a potential source of resistance. Support broken tends to act as resistance. So there's still a lot of mixed signals for this market, but overall, I think the longer term trend is starting to, when I say longer term, I'm talking about the weekly time frames. The longer term time frames are neutralizing, and it's the bulls to lose in here, and it just doesn't feel very good when you look at all the stocks that are getting destroyed and not recovering quickly.